Ashu Shinghal, who's the Managing Director at Mahanagar Gas, joins us now to talk about that. Mr. Shinghal, thanks a lot for joining in. If you can just start by telling us a little bit about this acquisition, right? How are you planning to fund it? Where will the 500 crores come from? Will it be largely from internal accruals? Would you want to take on any debt? Because you had said earlier that you're planning to incur some capex as well. And what kind of incremental volumes are you looking at post this acquisition coming on board?
Very good morning. The funding will be primarily done through internal accruals only because we have a very healthy balance sheet and there is hardly any debt on our balance sheet. So around 530 crores can be easily managed through internal accruals. As far as the volumes are concerned, currently there is 1 lakh standard cubic meter per day sale is happening, which is 0.1 MMSCMD. And going forward, we expect this sale from the Union Ashoka Bilcon company to go up to around 1 MMSCMD. That is almost from 1 lakh to 10 lakh standard cubic meter per day.
So when does that happen, sir? This ramp up that you're talking about, which fiscal year are we talking about?
Around 7 to 8 years from now, maybe around 2028, 29 financial year.
Okay.
Mr. Shinghal, to go from 1 lakh to 10 lakh, how much investment is required?
See, currently the company has invested around 270 crores. That means around 135 is the equity contribution and balance is taken through debt. So we expect around 100 crores per annum capex will be done, but it needs to be reassessed once we take over the company. The takeover is subject to obviously the PNGRB approval, which is expected after 5-year lock-in period, which is getting over in September 23. Somewhere around October or November this year, we are expecting to take it over. After that, we will do once again the reassessment about what are the targets, what is the volume growth, what are the margins and the profitability of the company. And we expect around 100 to 150 crore per annum will be invested into the company.
So we're talking about at least 700 crores of investment to reach 10 lakh crores 7 years hence, or maybe more, right? 700 to 1,000 crores over the next 7 years.
Yeah, around that 700 to 800 crore. It's a very ballpark number. Depends on not many things.
So, Mr. Shinghal, let's just delve a little deeper into that. I mean, there's one section of the market that's been debating whether this is a pricey acquisition for Mahanagar Gas because you've had to pay a little over 6 times trailing price to book. So you invest this much amount, as Prashant mentioned, 700 to almost 1,000 crores over the next several years. What's the immediate ramp up? And is the exclusivity in these regions absolutely assured to this entity?
See, exclusivity should not be always taken as a negative thing. One, that if we are not having exclusivity on our GAs, then we have the opportunity to do in other GAs also the marketing. So in that way, we don't want that exclusivity to be seen a very negative one. But as going forward, the matter is sub judice and we expect that exclusivity will remain for some time to come. Anyway, it is a regulator's matter, so we don't want to comment on that. The other part is that this is not a very pricey acquisition because it is almost 4 times from what the equity contribution has been. And similar acquisition, let us say in MNGL, has also happened 4 times from the capex. Otherwise, also, if these 3 GAs are being seen from a broader perspective in terms of MGL, because we have been bidding for so many rounds. However, we could not make it through in many rounds. So our balance sheet is very healthy. We expect that this cash should be better utilized rather than putting into just bank and getting some interest on it. So there is a 3 GAs we have, 3 more GAs coming in one way by inorganic growth is a good potential we expect. And around, if you see MGL history also, it is 3.5 million standard cubic meter in 25 years. So 1 million will give around top line of 2,000 crore and bottom line of 250 crore round about that.
So how much is the cash on the books currently?
Around 1,500 to 1,600 CR.
Okay, so 1,500 to 1,600 CR is the cash on the books, out of which about 500-600 will be used for this acquisition. The rest of the money, are you planning to make any more acquisitions in the near term, since you said that this is the route that MGL would like to use?
We are scouting for several opportunities, but as of now, we like to consolidate this one and look for any good opportunity if, as and when it comes. We are also looking at more diversification, like we are running our strategy exercise and expect that something will come out of it in terms of diversification into newer areas and maybe some electric vehicles or other areas like so many other things we are exploring as of now.
Oh, that's interesting because some of your peers are doing the same. So what are these areas apart from electric vehicles? What else would you be looking at? And have you started any work on it? I mean, any kind of timelines? Are you looking at diversification in this calendar year itself?
It takes some time. We are expecting that this financial year, that is FY24, should see something coming into being. But we expect that long-term haulage in LNG, electric vehicles, CBG are good areas besides other things which we already are working on. And some of them, if they fructify, in case of some upstream integration related to CGD equipment manufacturing, also we are thinking about it. But anyway, all these things are on paper as of now. We will do proper due diligence and see whatever can be best utilized.
Okay. Sir, you just to get those numbers, you said at 1 MMSCMD, after taking it up from 0.1 right now, 7 years out, this could, at that output level, at that volume level, top line addition could be 2,000 crores. And you said bottom line, you mean EBITDA, addition could be 250 crores, right? Just to clarify.
That's right.
2,000 crore top line, 250 crore EBITDA addition, 7 years out.
EBITDA, or maybe, may not be EBITDA, but maybe PAT also can be in the range of 200 crores or so.
Addition.
Okay, so yeah, that's an important clarification, Mr. Shinghal. This is a 7-year ramp up. When does the first sort of revenue benefit start to accrue? FY25, 26, how are you expecting this to play out?
See, going by the result of Unison this year, the half-yearly results are available, and also prorating it to the next this year, we expect that top line to be around 200 CR this financial year itself. And it is already a EBITDA positive company, and it may become PAT positive this year or next year, definitely. Going forward, NGL will bring its own expertise and core competence to multiply that factor and try to bring it the portfolio optimization and other synergies with NGL to see that the acquisition is real, making value and worth for our money.
So as you achieve economies of scale with this acquisition, what could the blended margins be, the EBITDA margins? Currently, you have a margin of around 8.2 rupees per SCM as of Q3. With Unison coming on board, will it get better? If yes, what would the broad range be over the next 1 year?
See, if I remember it correctly, then Unison has a range about 7.5 rupees to 7 to 7.5 rupees EBITDA margins. And we are running at 8.5 rupees round about that. So it's not way off. I mean, going forward, it should be improving. And both put together, if we take into account portfolio management, other synergies coming into force, we expect it to be around 8 rupees or slightly better than that.
Okay. All right, Mr. Shinghal, thank you very much for